There's an auto loan crisis going on right now, and nobody's talking about the potential impact on consumers like you and me. Should I lease or should I finance? Should I buy a new car or used? Welcome back to the channel. If you get value from this video, like, subscribe for more content like this. Let's get into it. Let's be clear. The government loves when you borrow money. I love capitalism. But if we're being honest, capitalism thrives on your desire for new shit. Let's take a look at this quick clip.
More than 100 million Americans have an auto loan, and auto loan debt in the US is currently at $1.5 trillion, a record high.
Outside of purchasing your first home, a new car or an auto is the second largest purchase for most people. Given the transaction prices and vehicle prices today, financing is required to buy these vehicles.
VP of Sales raised an interesting point about buying a vehicle. But what if there's another way to look at it? In this video, we'll dive deeper into the impact of this option, backed by facts and insight to help you make the best decision for your situation. Now, before we get cooking, there are three concepts I need to ensure that we're all familiar with, right? Since I'm a simple guy that loves things explained in a simple way, let's talk about compound interest, opportunity cost, and index funds. Now, compound interest is the eighth wonder of the world, according to my boy Albert Einstein. Now, compound interest is when your interest you earn on an investment earns interest on itself. So over time, it snowballs and grows your wealth exponentially. So think about this. So let's just use easy numbers. Say I have $1,000 and I'm earning 5% interest. That means in the first year, I'll earn $50 on my $1,000. But year two, I won't earn 5% on 1,000. I'll earn 5% on 1,050, and then so forth and so on. When you walk up to an investment, you have options in terms of what you choose to do. You choosing one option over another is the opportunity cost. So, for example, if I can invest and earn 5%, however, there's another investment out there that I can earn 7%. The opportunity is that 7% minus the 5%. So I have a 2% opportunity cost. Now, obviously, there's other factors like calculating risk and so forth and so on. Now, index funds, these are very common investments. They track the performance of a particular market index like the Dow Jones, Russell 2000, or the S&P 500. Now, they're favored pretty much for their simplicity. Usually they have lower fees, and historically they've returned double digits. So pretty solid returns. They're not usually the favorites among traditional financial advisors. Now consider the average car price in the US and the typical long terms. Now the fact that so many people have a forever car payment, forever meaning this mindset that they feel like they always need the newest version. Now because when you pay off a loan, you immediately upgrade to the newer version, many people are paying a car note for decades in a lifetime. And when we add in spouses and children, vehicles, this can multiply accordingly. Now the question is that if you had that payment that you're paying for 10, 20, 30, 40 years, how much would that equate to if you were to invest that same amount over the course of time? And that's what we want to take a look at. Make a decision based off of the opportunity to be able to make money off of those funds that you're contributing on a monthly basis. If it seems worth it at that point, then the vehicle is worth purchasing. Let's take a look at this clip.
In 2023, the average monthly auto loan payment for a new vehicle is $725, up from $650 in 2022. The average monthly payment for a used vehicle is $516 in 2023, up 2% from the prior year.
So now we have our number. The average car payment is over $700. Now for the sake of this exercise, most people watching this video should have another 20, 30, maybe even 40 years in the market. So we're gonna base our investment on $500 payment contributed on a monthly basis over the course of 40 years at different rates of return, 8%, 10%, and 12% rate. Now this is where the index fund we discussed earlier comes into play. Let's just say we use a low-cost S&P 500 index fund that has returned between 10 and 11% over the past 40 years. Now, last year, specifically, it returned just under 25%. So it's going to fluctuate depending on the year and the return of the market. Now, why we use an S&P 500 index fund, you may ask? The short answer is it's based on a long history and it has a proven track record. Now, looking at the graph, at different rates of return, 8%, 10%, 12%, you're losing somewhere around 1.7 million to almost $6 million. Name the car that's worth losing this amount in your nest egg. I'll wait. Now, this isn't just about cars. It's about understanding the opportunity cost of every dollar you spend. Every dollar could be working for you, compounding and growing over time. Now, with this information so far, you may be asking, if this is the case, when will it ever be a good time to allocate money for a car? It's a great question. The short answer is when you're maximizing your savings. Now, this looks different depending on your current salary, goals, and expenses. However, there are some core ideals, such as maximizing contributions to your 401k and other retirement savings and paying off all consumer debts. Now, do the math. And when you're on track to reach these future financial goals, then the funds in access can be used for vehicles and other discretionary costs. The goal of this video is to stay informed. We can't depend on any sort of government or salesman at a car dealership to plan for your particular financial future. It's up to you. And this video may at first seem a little bit discouraging. However, once you are able to sit down and make decisions for your financial future, it becomes a little bit more aspirational. You start to be more informed about the decisions that you make. You become an independent thinker as opposed to moving along with the crowd. Now, remember, this is not investment advice. Markets can be unpredictable, so it's very important you do your own research and consult with a professional. My goal is to inform and inspire you to think a different way about money and to make informed decisions about your financial future. If you found value in this video, like and subscribe. Somebody you know is about to buy some sort of vehicle or go shopping, so share this video with your family and friends. Can't wait to see your thoughts and comments below. Let's continue the conversation. Stay focused. I'll see you in the next video.